What up, traders? What up, investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Today, we're going to be looking at the SPY and really on what happened, giving you some really cool analogies on what is going on, what could happen, and so forth. So, without further ado, let's go ahead and jump into this chart. Again, this is a chart, something that I found, I believe, from Wall Street Bets or maybe something else from online. Basically, this is a 60-minute chart of the Dow Jones, of course. President Trump tweeted on October 12th that he's saying stock market hit another 300 points. Great leading indicator of it all. Don't run with Sleepy Joe, blah, 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 blah. Of course, you can see what has pursued since then. Again, basically, the individual is calling President Trump calling the top in a very short period time here. So if we switch over to the charts here, we're going to be looking actually at SPY and zooming here on a daily side. And October 12th falls into this candlestick right here. So again, this was the all-time high for SPY at $358. Of course, we hit that right around the 354-ish level here. That's when President Trump made the tweet. Of course, since then, I'm not saying it was him who did any of this. It was just a very type pattern that we saw. So looking from the Fibonacci retracements, what we love to use to track the stuff, this kind of falls in right around that 78.6 percentile move. So normally we can call it a dead cat bounce, we can call it whatever. So imagine you're a battleship in the open ocean and you're the captain of this battleship, okay? You go on, it's nice and steady, you just came out of battle, everything's great, and out of nowhere, you get hit, you see some signs of aircraft or you see something in the distance, okay? Then what happens is you start getting ready for battle, but then out of nowhere, the battle has started way before you even got ready for it, and you get torpedoed. That's basically what happened outside of the parameters of the stock market. I know people like to do sports analogies, not really big on sports. I'm more into history and, of course, things that really make sense to me. And of course, that really just makes sense if you're a battleship and you get torpedoes, because normally that's usually a big surprise, aka torpedoes can really damage you. It's not, we're taking on water right now on the battleship of this captain of your battleship. We're taking on heavy water, but if this water can withstand and we get the boys downstairs to put some planks or weld it up or whatever they do to fix battleships when it gets hit by a torpedo, if we don't break below this previous low. So the previous low in SPY is around 319, let's just call it 320. If we get more selling, aka if we get hit by another torpedo, that could break the ship and we could kind of go down in the ocean like the Titanic. Again, I know Titanic's not a battleship, but it's a big boat that everyone knows about, it can relate to, that did sink in the ocean. That being said, if we do hold this pattern, because again, there isn't really too much support as of right now what we're looking at. So looking at these Fibonacci retracements here, we can flip that and we can do the Fibonacci extension. So the Fibonacci, extensions here. So the swing high to the swing low to the swing high, and looky here. So this kind of comes back to what we talked about the other day. I made a post, I can show it here now, that we talked about, hey, if we break that 3,300 level, we could really see some downside. And that's exactly what happened. Again, not anticipating the torpedo, but getting ready for something to happen, because we broke a lot of standard deviations on the move. This was well out of the ATR or the expected move for SPY on a given day. So normally when that happens, that creates a lot of selling or panicking, and people just run. They're supposed to go down below deck and fix the hole, but they're too busy running around doing whatever. I don't know what they'll be doing, checking for life, running to the rafts and everything, but you shouldn't run to the rafts quite yet. If we start getting a break below certain levels, then you should start running the raft. It would be normal to come down even to around that 323 level. That would be the next level for initial support. And we're seeing I have a little bit level just slightly above it to kind of see how it pans out. That falls in right with the 144 exponential moving average, which is also another Fibonacci number. So this is going to be a pretty strong, significant support. So what we're going to be doing here, we're going to be drawing this magical rectangle here, okay? And we're going to color it what color should we color it? I'm gonna color it. Let's do it. We're gonna make it nice and let me go with more colors. This is the like, if you don't get anything out of this video, this is the most important part right here. And okay, we're gonna make it like a bluish because that's gonna signal that it's gonna be sinking into the ocean. So that would be the water level here. If the water level rises above and the ship goes below it, of course, that's gonna be signaling, hey, we sinking, Captain, and then we could go lower. Again, I'm not predicting anything. I'm just saying if it hits these levels, that's what could happen. If anyone's out there telling you predictions, Godspeed to them. You really can't tell if the stock market's going to go up, down, left, or right, but you can make countable moves on certain levels. So showing initial support here around that level. Again, if we do break that, we could go little, get the bubblies and really go down lower. We could even see the next level after that be around 315. I know that's substantial. I know that's a lot of downside, but we're running into a circus show. We can't have any of the talking heads or the wannabe heroes in the Senate or House to really get anything done because they're too busy playing grab ass. But that being said, with this, we're seeing the Fibonacci movement here as well with the other side. So if we do get a bounce, oh, sorry, we do that back. We do get a bounce. Again, it could be a dead cat bounce, which means it doesn't bounce very high and it just falls right back over because it's a dead cat, and a dead cat is a dead cat. Actually, should look that up where that analogy came from. But that being said, what we saw previously, we again, this is a very aggressive move. This was a big torpedo, and it hit our main engine. So we're just slowly chugging along. We might be just doing like a very sharp left bank or a starboard turn or whatever I think the right analogy is. So with the 5 and 8 already crossing through the 21, which is again our trend that we always look for, and the 34, a very aggressive movement. We've seen this previously up here, but then we kind of came into chop mode. So in theory, again, we could be just chopping around at these certain Fibonacci levels. But if this, like we talked about, the selling could continue, we could get a little bit of a run up if we can build a base here and kind of consolidate. Again, we have a lot of stuff on headwinds. Now we're going to sailing of battleships, looking for this movement here to basically come up to a key significant level, maybe around the 8 to the 21 EMA for initial touching, maybe just kind of saying hello, and maybe we can come right back down. We've kind of seen that pattern here multiple times. This kind of makes me feel like this is kind of similar, excuse me, what we had at the beginning of summer, in like the May-ish, June timeframe. We had a huge come down, traded sideways, then came down a little bit again, but we never really broke that low of previously. But of course, this is still back of everyone's mind on how steep that selling was. And our human brains are not the most intelligent at times when it comes to emotions. So with that emotion being triggering us, we're like, oh my gosh, I lost 20% of my account a couple weeks ago. This could be even worse. And that usually just kicks in that overall selling and just fear, and that really kind of the same expression of you shoot first, ask questions later. That sometimes is a good thing, but in the market sometimes is a bad thing if you don't have a game plan on what you're doing. If you're just going out there selling or buying things, a little bit of just craziness and not really kind of making your levels of support and resistance. So that being said, I know this is getting a little bit long-winded and boring for some folks, but again, looking for that key initial level to hold around this level here. Again, if we do sink, we could get hit by another torpedo, or we could get hit by a storm. We could be running into a hurricane-ish storm. Again, these analogies I can go on for days with. So just be mindful of that. We're looking for this little bit of consolidation here. Initially, if we can get down to this level, if we break, we're going to go lower to 315. If we get that bounce, we're potentially looking for where the 21 EMA lies. So that could be around like that 337 to 338 potentially kind of movement. We are up just slightly today, maybe just a 1.5. Nothing too significant yet, because again, yesterday was a huge torpedo day, and all the boys and girls are down there trying to weld things up and get things ship worthy again. So hopefully this was entertaining and then of course educational. And if it has, please hit the like. If it didn't, you know how to hit the dislike. Again, I hopefully to see you on the Discord, again, completely free down below. And if you want to trade like a pro, check out Tastyworks is what I use for my options trading and my equity trading stock positions. Again, guys, thank you so very much. Please catch you guys on the flip side. Peace.